Forgot to move the mic. I wonder if that makes a difference. All right, welcome back everybody to another market day. I am your designated Inquirer. Today is 9/16/2020, and this is your market wrap-up of Bitcoin and possibly a little bit more of the Fed meeting. We may be putting both of those together since they kind of have to do with each other more than not. I have explained a little bit of what was going on about the Fed meeting in the last two videos that I made on Tesla, on the NASDAQ. And right now we're going to be tackling what was going on in Bitcoin. Now, when we're talking about Bitcoin, we're basically talking about a mode of currency, okay? And so to better take a look at how it was acting, what we will be doing is adding a study to basically compare it with 20-year bond. Now, something to note that when people are buying bonds, it is generally means that it is decreasing the yield and also increasing the price of the dollar. When you increase the price of the dollar or the value of a dollar, it means that you can effectively buy more Bitcoin with less dollars. So it makes Bitcoin worth less dollars. So it shrinks the price in name only, simply to the fact that there was a shift in monetary value. That's it. Not necessarily that there was more or less demand for it, simply because that there was a change in value with regard to what the dollar is. But whether or not you want to attribute that also to a shift in demand for the dollar, that could also be an argument. But in here, what we see is that there is basically some sort of correlation to what bond prices and what Bitcoin does. Now, let's take a look at what happened today. Today we saw a pretty steep decrease in the prices of bonds, which led to an increase in the price of Bitcoin up until the end, where we did see an increase in the dollar. That was the really weird part about today, that at the same time as bonds were decreasing, the prices of bonds, which means the yield was going up, which means the dollar should have been going down, the dollar was going down. No, the dollar was going up. Where the dollar should have been going down, the dollar was going up. That was a really weird part. Now, what was actually weird is actually that bond prices were coming down, because what the Fed was saying is that they're going to be maintaining their Fed funds rate from 0 to 0.25 for the next 3 years at least. And they, like a week ago or a couple weeks ago, they basically said that they were going to be keeping it up until 2022. Now they're saying well into the end of 2023. What does that mean? To me, it means that they're talking out of both sides of their mouth, because on one hand, you have them basically altering their projection for the end of this year that we have better growth, and yet somehow the economy has to be helped for another year. Does that make any sense? No. What it means is that watch what I do, not what I say. In that the projection, what they say is going to be happening for the end of this year, in that the amount of growth that we have and or the shrinkage that we have for the whole year was a little bit better. Okay, that's what they were saying. But in terms of actions that they're taking, they're saying, and they're going to be executing basically quantitative easing for the next 3 years, not the next 2 years or 4. Next 3 years, not 2 years. And that has to do with basically how strong or weak they see the actual economy. And what they're more than likely, what they're seeing is a deteriorating factor for the economy, given that every day that we do not have stimulus, people are still suffering, people are more than likely going to keep getting evicted, and they're going to be fired because there isn't enough demand to be able to sustain all of these wages, right? October 1st is the day that PPP protections for jobs runs out. That is the day that we're going to be seeing how many companies are going to be firing people and in what numbers. And it's going to get ugly for a good amount of time because the protections are falling apart. And it's, to me, that's more like, to me that seems like Judgment Day if Congress does nothing from here till then. And my suspicion for when Congress will actually do something will probably not until actually March. I'm thinking that's probably when it'll happen, because if Democrats don't do anything playing political football, because let's face it, everybody's playing political football here. If they're going to be playing political football and they don't do anything until November, and Biden, assuming Biden wins, then we have basically Republicans still in the Senate not wanting to do anything until basically Biden gets into power, until there's a shift to whether or not Democrats take the Senate as well. If they do take both the Senate and the House, will they pass immediately stimulus? I don't know, because Biden is more of a moderate, and whether or not they actually push for immediate stimulus is one thing, which they may do, we may have something in January, after January the 20th, assuming that Biden wins. If he doesn't, it's a completely different story, but assuming that he wins, there could also be major stimulus coming around a few months later in March, around the end of the first quarter 2021. If that happens to be the case, and we do have major legislation in terms of increasing stimulus, making it more permanent, whether or not it is permanent, and whether or not we have some sort of jobs bill that includes basically infrastructure, actual infrastructure bill being passed, where we can finally start to revitalize the infrastructure of this country, including building tunnels, more airports, better bridges, and a lot of other things that we need, which for a good long while we've been receiving a D by basically a group of engineers that goes out and starts grading bridges and stuff. We've been getting a D for our infrastructure as a nation for the last few years. Well, I don't even know if that grade has deteriorated to an F as of recently, because we still haven't passed a bill of that nature in still a long while. Here for Bitcoin, we do see that the point of control is lower. So that tells us a couple things, right? That one, we will probably be seeing a rising bond rate. The bond does rise, or bond prices rise, the yield will go down, the dollar will continue to move upward, and if the dollar continues to go upward, Bitcoin prices will probably drop to where? To probably at least this point of control. From there, if we do reach below 10,000 again, we'll see whether or not Bitcoin can hold these lows right here. And from there, whether or not they break those lows, it's basically anybody's game, because if that happens to be the move, along with equities dropping at the same time, it will seem as though there is a mass exodus from equities and assets like gold and Bitcoin, and more than likely there will be a fair amount of panic in the system. From this point, prices that we could see, I'm not exactly sure. We could be revisiting basically the prices that we saw back in March. That could be what happens. I'm not exactly sure. Well, basically up until we do see some sort of stimulus, which is probably going to be following the market. So yeah, that's Bitcoin right now. That's where I'm looking at it on the 2-hour time scale. These pockets right here of higher volume happen to be the trading day, and that's where we're at. This may or may not be the top. We do see right here that there could be a slight turnaround in momentum here, and if the shift of momentum to the downside is more sustainable, then we may see that deterioration in price. Or if for some reason, which kind of happened today a little bit, that there was some resiliency, some strength in Bitcoin compared to gold and equities, what we may see is a continuation upward in price of Bitcoin. If Bitcoin gets lucky enough to be the asset of refuge while the rest of the world is burning to the ground, then this could be what sends it to the moon. But those are a lot of big ifs, and a lot of things have to go right for that to happen. And that's in the face of a rising dollar. So that would mean that the demand would have to increase to outstrip the decrease in value from an increasing demand for dollars. So yeah, that's that, and that happens to be the end of this video. Thank you guys very much for watching. If you guys happen to like what you guys are hearing and or like this content, please do like and subscribe and hit the little notifications bell to make sure you are alerted to when I keep talking about these things. And if you guys find it valuable, also please do share it with your friends that you think need to hear this. Yeah, so until next time, be safe, stay healthy, and yeah, take care. Bye.